Canadian Bitcoin? Do we have
Yeah,
Scott?
the Twitter and the X and LinkedIn and YouTube. So, all right. Hello, everybody. We're live. We're here today with Scott Dedels, CEO of Block Rewards. Welcome, Scott.
Thanks, guys. Great to be here as always.
Yeah. So we're here with Ben, Wasim. We don't need to make any introductions, but we'll dive straight in, Scott. Thanks for coming today. You've been a great supporter of our event over the last number of years, from 2023, I think, right through. We back in 2024, I think, was your best presentation ever. I was just re-listening to it again. I know you did a great one at 2025, and I also listened to your one recently in 20 in Bitcoin Ireland as well, which was a great presentation. But anyway, just as an introduction, do you want to give us a bit of background about yourself and your company?
For sure, yeah. Thanks. That Montreal speech is one of my favorites too, and I always love to have the opportunity to get up on stage and share some of the ideas. The conferences are so cool, and the people you get to meet there and the kinds of presentations you get to see live. It's like you can only get them at conferences. So I'm super excited about this year's event. I come from Edmonton, Alberta, spent 15 years in the world of benefits and pensions before getting my orange pill thanks to Mr. Trudeau in 2020. And started studying Bitcoin like a lot of people during 2020, during the lockdown. I wasn't actually all that interested in Bitcoin when I found it. I was worried about inflation and what it might mean for pension assets. And that series of revelations, kind of started with Jeff Bruce, The Price of Tomorrow, and went into the Bitcoin Standard and just about everything else I could read from there on. I got really interested in the idea that Bitcoin is the future of workplace savings plans. So most companies that have a scale or a significant workforce try to offer something for their staff to plan for the future financially. And this is my background. And the problem is that all those assets are priced in dollars. And really, the escape hatch that we kind of all sort of understand as individual Bitcoiners, I believe there's a huge opportunity to transform the way companies think about helping their teams save for tomorrow. And that's how Block Rewards started in 2023. We launched the enterprise version of Bitcoin Savings Plan, which is our flagship product, last fall in 2024. So Bitcoin Savings Plan is a custodial platform where companies can help their employees save in Bitcoin through payroll. Employees get to elect a Bitcoin purchase that happens on a recurring basis through an after-tax deduction, and the company has the opportunity to match contributions the same they would an RSP or like you see in traditional savings plans like pensions. So old idea, dusted off with a shiny orange coat of paint, and we're really excited. We're starting to see a lot of growing interest. Inflation is on everybody's mind. Every company is trying to figure out how to make their dollars go further, and I really think Bitcoin Savings Plan is just such a cool way for forward-thinking companies to think about how to change what they're doing with their teams.
And pre-Bitcoin, you were in traditional finance. I see you got the big print there behind you, so that must be a favorite read.
It was one of them. Larry, actually, I met Larry for the first time in person at the 2024 conference, and consider him sort of a friend. And Big Print's one of my favorite books. I think it's such a big rabbit hole, and so lots of different challenges of how do we figure out how to access Bitcoin. And we were talking about this a little bit off air. Bitcoin Savings Plan, what I love about it, the beautiful part about it is just about the simplest way employers can think about doing this, because you want to have people saving in Bitcoin, saving in real Bitcoin, without all the complexity and compliance and all these other things, and that's really what we try to do.
Speaking of complexity and compliance, like your product that you came to market with, like, was there any government regulatory hurdles that you needed to get through to offer this product? Was when you birthed this idea,
Hoops of fire, you mean?
Hoops of fire. Yeah. We got up to, a good helping hand. Like the Bitcoin community is so cool. So people at Bitcoin Well and Adam O'Brien and Francis at Bull Bitcoin have helped us along the way, understanding the path. We're a FinTrack regulated money services business in Canada, and we, all our partners are highly regulated as well. So, it's funny, like people who don't know a lot about Bitcoin, they imagine that it's unregulated. It's super regulated. And the anti-money laundering and compliance that we have to go through to operate our business is very rigorous. So the short answer to your question is yes. There's lots of stuff we had to do, and the good part about it is it means customers have nothing to do. Like we handle all of that stuff inside our system.
and so who's your ideal customer? Like businesses of ranging size? Like, is there a certain kind of like scale sweet spot that you've found that is it often a Bitcoiner that's coming to you with this and the employees, or are employees coming to you and getting you to meet employers? So like who are you your services going to?
I think there's really two baskets today predominantly, and certainly the easiest one is where there's an organization where a key person understands Bitcoin, and there are lots of great stories about this. And if you're listening and you're a Bitcoiner and you run a company, you're exactly the people we want to talk to, because we don't have to explain to you why you want your team saving in Bitcoin. So if we can skip that part, it makes the rest of it a lot easy, because the software works great. It's very secure. It's very easy to use. And a lot of people just struggle with, why would you want to introduce Bitcoin in the workplace? So yeah, if you get Bitcoin, and a lot of these people are they're already buying Bitcoin for their company, it's a natural next step to want to roll this out and help your team come along. And we've done other things to make sure that people who actually don't understand Bitcoin can participate in our platform. So we want this to be for companies, knowing that, if there's 20 staff or 50 or 100, there might be 5 or 10 people who own some Bitcoin. And even of that 5 or 10, only a couple might self-custody Bitcoin in a wallet. So the product's custodial. You don't need to know anything to participate. It's a really easy way to DCA in and not have to learn Bitcoin on the fly. And we also offer an internal learning system full of great education content that helps people get orange pill themselves along the way. So yeah, if there's a Bitcoiner, that always makes things easy. The other one is, a lot of Canadian employers offer a savings program like a group RSP. And even when the company is offering their staff free money to participate, not everybody does. And so it's not uncommon for a group RSP where there's an employer contribution to still have 30 or even 40% of the employees just passing on the money. And so a number of our customers offer Bitcoin savings plan alongside a group RSP. And it's something that the employees that aren't so interested in the more traditional savings options can just choose and opt into instead. So it gives more of an a la carte, like a freedom of choice for the staff, which is, I think, really cool. It's, Bitcoin isn't for everybody, and we don't need to ram it down people's throats if they're scared about it or they don't want to put their own money into it. So that's another really great application that we've seen some really popular uptake. And the cool thing about that is, we've got one company in Edmonton. They got 100 employees, say, and 70 of them have an RSP and 30 of them are saving on the Bitcoin savings plan. And the Bitcoin savings plan employees are just lapping the other staff. And so, over time, the number of people that get interested. So it's Bitcoin does a lot of the work. You just need ways to, introduce it into your company. And this is where I think the fastest way to orange pill people is to just give them a little bit of Bitcoin so they start watching it. And the easiest way for most people to take a position in Bitcoin instead of just YOLOing in is to just buy a little bit every 2 weeks. So the system where people, most people are used to having paycheck deductions and saving off of their paycheck. So it all feels very familiar. You buy $20 of Bitcoin, you buy $50 of Bitcoin, whatever you want. You can dial it up, dial it down. But yeah, it's just a really user-friendly way to either get yourself started or to grow your stack without having to really think about it.
A real scam, I think, is auto enrolling people who new starts of companies into pensions. Is there no way we could lobby the government to auto enroll people into Bitcoin savings plans?
That's the vision, you know. I mean, this is where I think, like, if Bitcoin just continues to do its Bitcoin thing over longer periods of time, it's going to be really difficult to avoid offering something like this. And we're still just early, but that's where, like, going back to that first group, you know, for the employers that do understand why this is important, it's like having access to the best rewards tool ever. Like, you can offer this to staff that don't even understand why you're offering it to them, but 2 or 3 years later, they're going to be so happy you did, and those people will never quit ever, because now, and these are like true story, you know, we've got people who saving with us over the last couple of years, and maybe they put in 10 or 15,000 in cash, and even with the price retracement over the last 6 months, it's still worth like $40,000 or $50,000 today. So, you know, it's really important when you start saving, like at what point in the cycle, but also just being consistent and, you know, creating an average cost. You just ride the wave.
You kind of touched on what I was going to just retention was what I was thinking a lot of when you were speaking. And just from an employee's perspective, you know, the cost of hiring and training and maintaining employees in the sales force is fairly intense, right? And so the idea of being able to keep your employees, and it's always kind of counterintuitive. Like, do you want to make your employees so financially secure that they don't need you? When really it's kind of the opposite, low time preference, right? Like, if you can start stripping away the stresses of their lives and how grateful they would be. I guess I'm projecting and presuming this would be it, but you know, the creativity to free up somebody working in your company with loyalty and you know, less stress. Like, it seems like a relatively low bar cost for an employer for the services compared to, like, you know, all the number of ways that an employer would try to keep an employee happy.
Well, it's also
totally.
two sides of the same coin. Sorry, Scott, right? Like, it's just like, you know, the retention, but also you can attract employees with it, right? It becomes like a total compensation plan.
Yeah. I mean, and it's like you're able to offer free raises. You know, the money keeps becoming more valuable instead of less. The reason we need salary increases every year is because our money is melting, and the same amount of money goes a shorter and shorter distance all the time. And that is the reason why we do all this other stuff with our money, you know. And I think that the worse money has gotten at doing its basic job, the more we've confused saving and investing. And we've sort of, like, what we think of now of planning for the future is some kind of like hybrid of investing and gambling and saving all rolled into one. And I think that actually most people, the better they understand Bitcoin, it's the least stressful thing you can do with your money. It's not a basket of different companies you're trying to bet on. It's not a sector. It's just some rules around money, monetary theory, and economics. And I was incredible digital network secured by, you know, encryption and vast amounts of computation. And so I think if you can get there, and then it's really a much easier way to sleep at night, thinking about what your plan when you're buying a certain amount of Bitcoin, it's behaving a certain way. You know how that Bitcoin is going to be, you know, how it's going to work today, how it's going to work 3 years from now, 10 years from now. And the longer you can think further out in the future, the more time you have to think about your, you know, what you're doing now.
I've often thought, or I've often talked to people who have had a pension and possibly lost it. Now, I'm not comparing this to a pension, but they've, you know, put money away, you know, auto enroll into a pension. You know, they work at the company for 20 years. Next thing, the company goes bankrupt. Is an option. You know, and then obviously the erosion of the value of the money over time. They get to the end of the you know, and they retire, and they you know, their pension's worth whatever, gives them a monthly or weekly dividend, I guess. But then it's not enough. It's not enough to keep up with the cost of living. You know, do you, obviously you think, you know, Bitcoin's monetary properties are going to keep increasing over time, and people are going to be, you know, get to the end where they're, you know, and be able to collect out of that savings plan, and, you know, it'll be much better than the pension, obviously.
I think that's kind of like two ways to approach the question there. On the one side is savers need assets that are outperforming real currency debasement, which is actually very difficult to do. So what we get told is that, you know, inflation and 2%, 4%, whatever. And in that mind frame, you know, 7%, 8% is still, you're still winning. But as we know, like real currency debasement numbers are quite a bit higher. And in Canada, the money supply is expanding realistically somewhere more like 8 to 10%. And so, and then as a baseline, that means, you know, you need to be doing better than that. And there aren't a lot of sectors or investment products that can reliably beat that number. And so the other side of that is, I think that as more people start to understand the nature of that problem, the market will zero in on assets that can, you know, have a good opportunity or prospect of doing that. And so Bitcoin's monetary properties become sort of a self-fulfilling prophecy of the reason why it can continue to outperform is that Bitcoin's base function as undilutable money is really Bitcoin's killer application. So everybody in the world needs undilutable money, and we need it more than ever. More people need it more than ever, and barely anybody is using it right now. So if you have a general belief that undilutable money is going to be more important 3 years from now than it is today, and I would say the odds of that are very, very high, then and you know, the only other thing that needs to happen is a broader understanding that this product is available or this thing exists, and that you do actually need to be doing quite a bit better than 8 or 10% a year just to, you know, stay where you want to stay. So I think you put all those things together, and we're just at the very, very early stages of, I wouldn't even call it a secular bull run. This is a transition of Bitcoin monetizing as a commodity, and that process might take 30 or 50 years. But, you know, between now and whenever that process is completed, we'll see priced in fiat continued phenomenal returns over longer periods. So there's always going to be, you know, downturns. It will be cyclical like any other thing, but I fully expect us to be talking this way about Bitcoin in 2040, like still, because by 2040, there will likely still be a lot of people that don't have Bitcoin exposure and need it.
And just to double click on what you just said, right? Like at 2%, I know we're throwing out these inflation numbers, right? Like 8 and 10%, but at 2% inflation, the value of your money drops in half every 30 years. So, you know, a rule of 72, that means that at 8 and 10%, you're dropping what, every 10 years, right? Your value of your purchasing power of your money, right? That's significant, right? So to Dan's point, like, you know, all that money that you had stashed away in your pension, well, it doesn't have the same purchasing power. The number looks great on paper, but when you come to use it, it doesn't have the same effect, right? So I gotta ask you, Scott. Like, I mean, you know, you got so much experience. I gotta kind of love to be a fly on the wall, right, in your conversations with the CFO. Like when you walk in there and you have these conversations, right, with these financial custodians, right, in corporations. Like I gotta like, what's the kind of like the primary operational issues, like even psychological hurdles or barriers that some of these businesses have to deal with, right, if they're going to think about adding digital assets frameworks to their corporate treasury strategies? Like what do you have to deal with?
Yeah, that's a great question. You know, so today we don't actually deal in corporate treasuries, but we do definitely get asked about it. And like, you know, we were talking about this off air. So I do think that, Bitcoin treasuries have been a very popular subject in Bitcoin for the last year and change. Certainly, as strategy over the last few years accelerated their purchase, and then had a number of like high profile competitors IPO or takeover. To me, Bitcoin is the ideal corporate asset, period, because it's liquid, it's divisible, and it doesn't require any appraisal. So, a lot of companies, medium-sized enterprises with excess cash flow, they may buy the building they're in or the building that's next to them. And these are obvious things to do that have always worked. And the problem with buying the building next to you is that you then need tenants, and you need to maintain the building, and you may need security. And if you want to access the capital, it's a little bit of a process, not impossible. But if you wanted to sell 10% of that building, that is impossible. You even need to sell the whole thing. And so this is where, Bitcoin is a battery. This is a non-physical form of property that a company can start thinking about accumulating and leverage it as collateral at any time within hours, sometimes, like if you're using a service like Ledin, and not face any tax complications there, or sell it. Like if you want to sell any portion of it, Bitcoin is the most liquid asset in the world. So I think that we're in this early time where we're still calling them Bitcoin treasury companies, because they're really pioneering how public and private companies think about using Bitcoin as a financial tool, because it is this incredibly nimble and innovative way to think about your non-working capital. But I just think the future is that companies will choose to hold Bitcoin with the money that they don't need in the short term instead of other assets, just because it's the smartest thing to do. And nobody will call that Bitcoin treasury. They will just call that smart fiduciary planning, and that'll be just basics of running a company. So you can't hold dollars, and it doesn't matter where you are, but you can't hold them for all these reasons we just discussed. And other assets, in addition to having some of these challenges like liquidity, are priced in those same dollars. And I think that we are at the early stages of that just becoming a real problem. So, in the West, I think, in Canada, we've got a lot of confidence in our money, even though purchasing power is certainly getting away here. But I don't think anybody is really sounding like 5 alarm bells. But if you talk to people, Bitcoiners from other countries where the money has failed, they have a very different story. And the money has failed in a lot of places that didn't think it would fail there either. Like Lebanon's currency imploded in February of 2023, and Lebanon was in some remote third world country. It was a very great place to live, sophisticated economy, but they suffered like a 90% overnight devaluation. And when that happens, like the value of assets goes completely out the window too. And so people will say that Bitcoin is priced in dollars. Bitcoin has to be priced in whatever currency you're planning on using to buy it. But look at the Bitcoin price chart of Bitcoin priced in the Iranian dinar. And that's, this is money that has gone absolutely worthless. And Bitcoin is not worthless in the same way that other assets in Iran are. It's still liquid. It can be sold online anywhere in the world. It still has the same value everywhere else. And so this is, whether your country's suffering from 5% inflation or 50% inflation, this is the other cool thing I think about borderless businesses, is that we're just talking about a money system that no one controls and that is borderless. And so, there's another, throw that onto the pile of reasons why companies would want to own this stuff.
I'm gonna put you on the spot now, Scott. Just off air, we talked about digital credit. Ben loves digital credit. What do you think?
It's putting you on the spot there.
You're putting words in my mouth, but I wouldn't say I hate digital credit, but you're putting words in my mouth.
You come on this podcast with a hat that says digital credit, and you go to a bunch of events that says digital credit. So
I have, yeah.
you don't like it?
No, anyway, you continue. You're asking Scott a question. I'll comment after.
Yeah, I didn't want to offend anybody. Personally, I hate the term digital credit. And like maybe a very quick personal story. When I started Block Rewards, one of the first things I did was we ran a podcast, a Bitcoin podcast for a couple of years, which I had a ton of fun doing. And I was learning Bitcoin along the way myself, and I think that Bitcoin, truly, nobody has mastered Bitcoin. This is kind of one of the cool parts about it. But for a long time when I was doing the podcast, one thing that I was doing to be different was starting each show asking every guest, what is Bitcoin? What is it? And you would think that question would be easy to answer, or everybody would answer the same way. And that's not how it works. I learned a lot by asking 100 different people that question. And Bitcoin is money. And that was the best answer I ever heard. It came from Dave Bradley, who's another famous Canadian Bitcoiner and one of our directors at Block Rewards. And that's just it. Bitcoin itself is money. It was designed to be peer-to-peer electronic cash. It's money that, because of its properties, retains value differently than government-issued paper money, fiat currency. But that's what it's for. And so, just generally speaking, I'm against Bitcoin being wrapped inside any other financial product, ETFs, tax-deferred savings vehicles. And this is why we designed Bitcoin Savings Plan the way we did, because it's like you just want people owning and interacting with Bitcoin so that hopefully they will also come to that same conclusion and learn that Bitcoin has value because of what you can do with it, because of what it's for. And so it doesn't need things on top of it. And we exist in this fiat world. And so I don't begrudge people who are interested in, tax advantage ways to hopefully maybe get more. But Bitcoin is not meant to be a pet rock sitting inside an RSP. It's meant to be this incredibly freeing financial tool of empowerment that lets you spend your money however you want, take it wherever you want, borrow against it if that's what you want to do, and know that no one can inflate away the unit value of what it's worth. And so, so I don't think that it's already hard enough for people to figure out what Bitcoin is, and you need to learn a lot about money and other things to parse through all that information. And I just sort of think the last thing we need are prominent people in the Bitcoin space convoluting the subject by trying to layer additional terms on top of what this thing just actually was meant for.
Before you jump in, Ben, can I comment, or do you want to go?
No, you go.
Go. I'm not sure where I stand on this, Scott, but you talk a lot about time and money, and that's a common theme through your books and through presentations. I think we're a long way from Bitcoin becoming money, and kind of the idea that I have is, with the digital credit and the treasuries and wrapping Bitcoin and financial products. I think that's part of the path. I think to getting to the point where where Bitcoin becomes money. And for me, I think whatever way we can get it in front of people, and if it is to become money, it'll work itself out along the way. But yeah, that's just my 2 cents on that. I understand where you're coming from. I just think that we, in a perfect world, and we were just to go from day one, this is money, but we're not going to get there. There's a path along the way, and it's a long path and a winding road.
I mean, I guess it really does depend on what your definition of money is. If you're saying it's only money when we can spend it at Starbucks to buy a coffee, then yeah, that's probably that's very far away. And it really depends if you travel on how country's local currency has behaved. Like there's very little impetus for people to be spending Bitcoin transactionally in Canada because the Interact payment system, like our actual payments network in Canada, is very good. So that problem, Bitcoin doesn't solve a problem that's obvious to people here. And, the less obvious problem is that a stake is $50, and connecting how Bitcoin is the solution to your $50 stake is a lot more abstract. And that's kind of like, I think, part of the challenge. But I mean, it's absolutely still money. It's just not what we're using in a day-to-day form of currency in Canada. So I think that it comes down to your definitions.
Yeah. Okay. Ben?
Well, I'm always curious. The thing I'm always most interested in with Bitcoin is the adoption curve. Like that this topic is probably my favorite topic just to kind of get into. So I'm also I came to Bitcoin through Trudeau myself, and so it sounds like we were on a fairly similar time frame there, which has me rethinking what I've done in Bitcoin. I don't have a company and 2 books and multiple presentations under my belt, Scott. So kudos to you. I'm always curious. Like I'm always interested in like what is a Bitcoin maxi, and like I wouldn't say I'm a TradFi. I'm from real estate, but you've got a traditional finance background, and I'm kind of getting the gist from what you just said. Equities, ETFs, credit products, if they are credit products, that you align more of we have perfect money. We don't necessarily need these. I don't want to put words in your mouth, but like I kind of getting that drift. To wrap this up, we're on a roughly the same time frame now. I'm up on my Bitcoin, but over 5-year time frame, it's not like I have felt that euphoria per se. And so other individuals in that period of time have, outperformed, quote unquote. And we live in fiat, day to day, at least at this part of the world. Or I guess most parts of the world, we all live in fiat. So the roundabout question is like, what is someone's need to hold in dollars, and what other assets would someone want to kind of live in the fiat world to kind of protect their Bitcoin, if that's their goal, rather than use their Bitcoin, where in the short term, somebody could have less Bitcoin in the last 5 years if they had started fully on it, 100% maxi, and where we are today. I just think about that. Like, anyway, so just what role, I guess the short answer is, how much fiat does a Bitcoiner need to have, where we're in a bear market and you hear it a lot, like money, and people don't want to get rid of their Bitcoin. So just the philosophical, and
yeah. I mean, there's maybe a few different threads to pull on there. I think that, you still maybe want to think about Bitcoin as being something, as one tool, and your level of conviction can go from 5% to 100%. Like I was saying, I think that for me, like I'm Bitcoin only because, one, I have the conviction in it, but two, I think it is just a much simpler strategy. And once you start dabbling into other things, there's often like real estate is an easy one to pick on. It's not just a matter of buying a house and then selling it at a higher price later, because in between there would have been a number of different renovations or property taxes. Like there's often people who overstate their returns on real estate investments because they haven't properly tracked the different with things that they've spent along the way. Yeah. So it's a tricky one. Like I think that Bitcoin genuinely does have a number go up problem, and I said this like a lot over the course of Q4 when there wasn't a blow off top or like a meaningful blow off top in the last cycle. Number go up is a really important part of recruiting people to Bitcoin. And if Bitcoin does not outperform other assets, then the case for it to be something that it's really important that people own does start to crack. I firmly do believe that. And that is a really tricky thing. And depending on when you bought, yeah. I also think that, if Bitcoin is not going to have massive run-ups, but then you still have a 50% drawdown every 4 years, that's a problem. And that's going to be a problem for people that aren't interested in Bitcoin's other properties. Having said all that, every fiat currency does fail. And I also think that there's a really great argument. I think with currencies, come back to Canada. The last time the dollar was really this low was like around the turn of the century. And it was like, low 60s. And then, in the 12 years following, whatever, we kind of got back up to 80 somethings, whatever. So what I think is happening is that in everyone's mind, they're imagining that we're in another cycle where our dollar is low again and it will at some point go high again. Personally, I think that what we're seeing now is the early days of what's called dollar milkshake theory, where the weaker fiat currencies are on an accelerating basis collapsing into the US dollar. So I expect that, and I don't know if that's 2 years or 5 years or 10 years, but I think, the next stop for the Canadian dollar is something in the 50s and then probably into the 30s. And it will be at that point that you wish you had more Bitcoin than you do. Because what will probably happen as that's happening is it's going to get a lot harder to get your money out of Canadian dollars. If you want to, at that point, you will probably be too late. It will probably be very difficult to get it out of Canada if that was something you wanted to do. And there is already, steps happening to, increase penalties, exit penalties, etc. And so, there's investing and there's getting ahead. And this is not the sexiest thing to say, but I really don't personally think about Bitcoin as being rich. It would be nice if, hopefully it does improve your material, wealth in the short term, if that helps us bring on more people. But I think that ultimately, you're protecting yourself from a currency event that basically is 100% likelihood of happening, and you just don't exactly know when. And so we know that dollars are programmed to become worth less. They have to. And the rate at which they devalue has to accelerate. So you're sort of playing Russian roulette with your other assets of, can you sell them for more and get out into cash or into Bitcoin, into gold, whatever, before the music stops and the money is worth a lot less. And for me, that's kind of the part. And this is a lot to explain to people in short meetings, but this is why, people are continually learning about Bitcoin. But, I think that, again, it's like we're re-separating the notion of, gambling and investing and saving. And Bitcoin is money that you're setting aside that you want to put somewhere that is going to be immune from currency debasement, seizure, with the expectation that, we're probably entering into a time where, I would say definitely across Europe, Australia, people are going to want more of that stuff. They're going to need it.
Go ahead, Wasim. I know you had a question, or maybe I on the currency debasement side, like you said about the Simon Dixon. I would listen to some of his podcasts and some of his information, but he said the US dollar will be the last domino to fall, and you're kind of seeing that now play out, like you said, the value of the Canadian dollar. But yeah, sorry, go ahead, Wasim. Wasim frozen.
He looks like he's having.
Hear me? Or
I can hear you now.
We're having some tech issues with Wasim.
Scott, I have one question. So your presentation back in 2024 at the Canadian Bitcoin conference about the 99 monkeys.
Yeah.
So like, yeah, great presentation. And I think you kind of, you changed the name at one point, and you were kind of like, you were going to do a previous presentation and you come up with this, like, not great for scheduling, great for the audience, to be honest. But the thought behind that, or you talked a lot about how the relationship between the time and money is being skewed, you know, and people can't really make that connection, you know, and I kind of see that now more, and I see it accelerating almost now with, you know, increased inflation, with you know, the people keep saying cost of living, the cost of living. You hear these terms, you know, all over the place. Do you think we're living in a time where that's accelerating now, where we, you know, and is that going to make people gravitate towards Bitcoin?
Yeah, that's a great question. You know, my new book is called Age of Time, and it is basically entirely about this, because we really live in a fascinating moment in human history where technology is accelerating. You know, I grew up in the 80s and 90s, and it was, things did just genuinely move slower, right? It was like you weren't having like new inventions and new apps, you know, and just flash forward, right? And it's like your AI model now is updating, you know, every few weeks, and can do wildly different things than what it could do before. Like it was, you know, it was like maybe 2 years ago when AI couldn't generate an image of a human hand. You know, that's really like, I don't know, maybe 3 years ago, but it's like we've gone from that to, I mean, I don't know what it can't do today, and we're on like, it's about to continue. You know, I think the human mind is often has a difficult time with exponential thinking, where we, you know, like the hunter-gatherer brain thinks in a linear fashion, and so it's natural for people to think that, like, you know, it took 10 years between iPhone 1 and iPhone 10, and so iPhone 10 to iPhone 20 should be another 10 years. Whereas like we're really getting into this place where it's like, you know, 3 days, and then a day and a half, and then hours. And that on its own, I think would be a lot to deal with if the money thing wasn't also really changing. So it's a lot to keep up with, that, you know, we're now being expected to adapt in line with technology as fast as we are, compared to how it has been for the entirety of like how most of us have experienced life so far. But you know, the way money works really did change. I mean, first in 2008, but then really, you know, since 2020. And like you know, inflation, you know, these things weren't part of the mainstream lexicon. Like they just weren't things that people were talking about, and everybody kind of like, you know, they could casually talk about inflation on the news in like 2012, and people just sort of would associate that with, you know, prices going up over time. But you know, now it's like most people are starting to really have to alter their consumption habits, because money is losing value faster than they're used to, and it doesn't make sense. So you put those things together, and the rate at which money is becoming worth less is accelerating, at the same time that, you know, our ability to think and make decisions and judgment is also being asked to speed up. It's causing more people to be interested in the problem. And this is where I think the 99 Monkeys thing comes in, because 99 Monkeys theory, for anybody who wants to go watch the presentation, is a study that happened in Japan in the 1950s. And they were watching monkeys where one of them had been taught how to wash a sweet potato because it tasted better. And they were just watching these monkeys teach other monkeys how to do it. And then after a certain number of monkeys could do it, mysteriously, unrelated communities of monkeys on other parts of the island started doing it without any exposure to the ones who'd been taught it. So it's theory about collective consciousness and information transmission, and basically like once a signal becomes strong enough, you don't need to traditionally be taught it. It becomes kind of sort of an awakening. And I think this is what's going on. Like there's, in technology, right? Like Elon was tweeting this morning about the singularity. We're moving toward a level of access to information. Like the average person through LLMs has more information at their fingertips today than like Bill Clinton did when he was president. And this is just part of normal life now. But the harder it gets to pay the bills, I think that is also something that causes people to self-study and try and, we're motivated by survival. And
Innovation,
yeah. And so, I think that we are on a collision course with things can only get so hard before something's got to give. And this is where I expect, like, I don't actually think that it takes 50 years for Bitcoin to meet your definition of money, Daniel, because if I have to pay $22 for a Starbucks in Canada in 2029, I'm going to be, people are going to be interested in some other way. And we are headed there, whether it's 2029 or not. So personally, I think that like this is going back to Larry Lepard. Larry and I had a really cool conversation. Actually, I think it was last year at the conference about centralization. And basically Larry's idea is that starting sort of with the World War I era, 1913 was when the Federal Reserve Act was enacted in the US, and we started to see progressive optimization of centralized systems. And the 20th century could really be categorized by, peak centralization. And what we're seeing now is, with the Googles and Facebooks and Amazons, and like things are just becoming, this is incredibly, maybe in the end, there's only Amazon, and Amazon's bought all the other companies, and that's like the end game. But money did that, and it had benefits. Like there was prosperity that resulted. It's not only bad, but these things have a life cycle, and the end result of centralized money the way it is now is that the greedy, powerful people can't help themselves but steal from everyone. And they've now stolen from us so much that our money is worth 99% less than it was 100 years ago. And like, you can only steal so much before people are just ready to do something different. And I think that's where we're headed.
Do you think, sorry, before you jump in, Wasim, is that a cycle of decentralization then? Do you think it kind of starts to move away from that centralization?
Yeah. I wonder about this. Like, so another, one of my favorite Canadian thinkers who's a Canadian Bitcoin conference attendee multiple times is Joseph Barbuto. And Joseph writes a lot about chondritive waves. And chondritive was a Soviet economist that theorized around boom-bust cycles relating to the price of capital and disruptive technological waves. And I think that we are headed into a fifth wave of a chondritive cycle, and the defining category of technology in that wave is decentralization. And so AI will be one of these things, and AI is really basically democratized expertise, and anybody can be an expert in anything now. Money, Bitcoin. I think that we're just on the cusp of starting to see decentralized alternatives that can outcompete. Things had to centralize because we needed record keepers, we needed ledger, someone to be responsible for the ledger, and that was how all of those institutions started. Because there was no alternative, right? There was no way. Henry Ford was talking about energy money in 1913 too, but there was no way to deliver a distributed ledger 110 years ago. So it was just an idea before its time. But yeah, I think the next 100 years will be categorized by a move away from this. Like, it's not a forever never-ending doom loop towards the centralization of everything. I just don't believe that.
So you brought up monkeys. I'm going to try to bring in the fish as well, right? Just to keep it on theme here. But just to kind of maybe paint it, Jesse Myers' chart about global wealth, right? Like in about I think it was 1,000 trillion, right, or somewhere up there. And Bitcoin today, last I checked, was like 1.3 trillion. So it's not even a percent of global wealth, right? So it's a fraction of a percent of global wealth. So there's certainly a lot of upside. But then you kind of frame that, if we're like the base layer, bottom of the ocean here, right? Kind of drifting layer one. And there's this entire capital stack above you, right? In Mariana's Trench, right? Like there's capital up there that is just never going to come down here, right? And likely you're not going to float up to the surface either. And you're right. I think maybe with time, and to Dan's point, it could take 50 years for this capital pool to change gradually over time. But then, bringing it back, how do you see institutional kind of behavior changing? Like, what are kind of like the significant structural shifts that you'll see, like with capital allocation over the next 10 years, right? Like if we don't bring Bitcoin into these capital markets through, fair enough, I mean, maybe different terms, sophisticated products, and admittedly, right, like Ben, you and I have some tough time wrapping our head against some of these digital credit products, right? So for the average normie, it's going to be even tougher. But at the end of the day, but how do we engage? How do we bring up the engagement levels, right? We could do it organically and wait, or is there some other more innovative way that we could do it?
I mean, I think that international politics will play a fascinating role how this plays out, because at some point someone's going to figure out either a currency like a BRICS currency that's backed by hard assets, and that might be Bitcoin, it might be Bitcoin and other commodities. To me, like, as soon as nation states start demanding proof of reserves or settlement in Bitcoin, like, things can change very quickly. And demanding that ships pay their toll for passing the Strait of Hormuz in Bitcoin is a great early indication that even if that was just being discussed, is a pretty crazy thing. So the paper money only works until there is a broadly available option that is more desirable. So if Russia starts backing a ruble with Bitcoin and gold, and other countries are willing to take the risk and not settle in dollars, I think things could change actually from the top. And this is kind of where I think that mining and the future of mining is like a matter of national security, where you'll see most large mining nationalized, and it won't be for the economic incentive mining. It will be for the economic freedom, so that countries can guarantee a certain percentage of blocks mined, so that they can have a certain participation in the global economy. So the same problems that we imagine perpetuate the fiat system, I think actually also ironically create the escape valve for large state actors to want to consider to do something different too. So, because honestly, like the dollar is pulverizing everyone else. And so yeah, I mean, it's like the same way individual people are being pinched, in Canada or everywhere. This is, I think, again, like, so much of the English Bitcoin conversation centers around the US, because the big Bitcoin companies are American, talking about US strategic Bitcoin reserve, and it can give us this false impression that it has to be something that happens in America, which is it does not have to happen in America. It could happen everywhere else. Bitcoin could become the currency of Africa. And there's 2.2 billion people there, or how there's lots of different ways this can go. And yeah, I mean, I think that you see so many headlines around the Clarity Act and all this different stuff, that as though it's the defining gatekeeper on whether or not this is going to be allowed to exist. And I just don't know that that's the case.
I don't know about me, but it sounds like Scott's bullish.
Yeah, I mean, it's like, back to my thing about everybody needs undilutable, unconfiscatable money. Like, we need that a lot more than we need the ability to stream 4K video on a handheld device. Like, everybody needs this thing. So you imagine the most desirable product ever, and it's been built in a way that everybody in the world can access it. Like, yeah, I'm bullish. Like, this is 1%. Like, it's something that solves an urgent problem, not just for every person, for every company, for every city, municipal government, every state government. Countries need it. Pensions need it. Endowments need it. Nonprofits need it. Like, everybody needs money that can't be inflated and confiscated. Period.
I think that's a good place. Ben, you're on mute. I'll go ahead and finish it up. I think that's a good place to finish, Scott. We're 52 minutes in. We usually we try to keep this to like 35, 40 minutes, but talking to you is great. I mean, amazing ideas. So to land the plane, then we have the Canadian Bitcoin Conference Industry Day on October 1st. We have the conference itself October 2nd. Tickets are available. Scott, hopefully you'll be there.
I will be there.
Perfect. We have lots more special guests. Check out the website. Check out our social media, and hopefully we'll talk to you again soon, Scott. So appreciate it for coming on, and that's it.
Thanks for having me.
Words? Okay, perfect. Thanks.